Let's look at Cardano / the US dollar. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So this is the big picture of what happened on the last day of Trump in office. Huge day up for the S&P 500. We are certainly seeing some rotation, and that will continue as the market is, really pricing in what the Biden administration means for securities. Okay, let's now look at the Cardano website. Making the world work better for all. A pretty generic statement here. Here you can see, proof of stake and Ouroboros, evidence-based development, secure, incentivized participation, scalable, and sustainable. So Ouroboros is the first peer-reviewed, verifiably secure blockchain protocol, and Cardano is the first blockchain to implement it. This is very interesting branding, the most environmentally sustainable blockchain protocol. Something that happened yesterday is that it became official that BlackRock is going to file to add Bitcoin futures to funds. So this pertains to two funds at the moment, but it is certainly a very interesting development. So the establishment, as it were, is warming up to cryptos. Here you can see the seasonality of Cardano, US dollar. We don't have that many years, hence we need to be very careful about drawing conclusions. We do see that February and March, which are around the corner, historically they are weak, but we do not have much data. Okay, so here is weekly data points. All the data we have here with the Cardano index. So one of the first things that jumps at me is that we have this very nice rounding bottom. That's a very key pattern, a very clear sign that we have gone from bears dominating to the bulls dominating. What is a bit of an issue for the bulls is that when you look at the RSI, we are literally at the same level that triggered a pullback in the past. And if you put yourself in the mindset of, someone who has a bullish position on Cardano, and you see this, then you would most likely start to think about maybe pulling at least some profits from the table. A long-term looking years into the future, this is a nice bullish development, but it is very important to just be aware of how a security behaves. Because when Cardano has a bit of a pullback, it can be big. So this pullback here to this low, minus plus 70%. This pullback from this high to this low here, looking at the wick, that was minus 50-ish%. So that's something you just need to be aware of, because we are quite elevated and we are seeing some pullback. Okay, so we do have a 9% correlation with the S&P 500, so very modest. On the daily data point, we have a 78% positive, so that's much stronger. Let's actually look at the correlation here with Bitcoin. If we can get it. I am trying to edit, but for some reason I'm not able to edit. Probably some technical issues, but yeah. Okay, so let's look at the daily data points. Let's load way back here. Look here at the PPO. So it measures the distance to the 200-day moving average in this case, with daily data points. And you can see that the current level we were at before the recent pullback, it was literally the highest distance we have been away from that very key moving average, which is a clear sign of maybe we were a bit too high. Also, the RSI set a record. So this is a textbook example of why it is important to look at indicators that could signal extreme bullishness or bearishness, because it is all about buying low and selling high. And when you see something like this, record on the PPO and the RSI, that is a sign that, okay, maybe it's time to maybe tighten your stops. So if you have like automatic, like let's say you are using a trailing stop, then you can tighten it up. If you did that, then you would most likely have a sell triggered around here. And it's by doing that that you can increase your gains. So then you would have like a sell order and you would be stopped out, and then you would have the ability to buy back on a key technical level. So that's something to consider doing. Okay, so looking here at the indicators, when we look here at the history of Cardano, there's good reason to suspect that there is some more meaningful, correction on the horizon. At least that has been the history of this key security. So let's actually measure some of the previous rallies, just to get that historical picture. So I think we could agree that this was a key low. So from here to that high, that's one. Yeah, I think we can agree that this also was a key low up to this high right there. Which other ones? I think we could agree that maybe this is another key low, and the key, a key rally basically. Okay, and let's get another one just to really get that historical picture. Like I think, yeah, maybe this is the more accurate point. Okay, so here we have some historical studies. So here we used 109 days, 252%. 59 days, 129. 138 days, 688%. And then we have the final rally, the more recent one, and that is 414%, 116 days. So if we sort of like take the average of the number of days and the size of the rally, then based on the history here, there's good reason to think that there is some pullback on the horizon that has happened in the past when it comes to rallies that have been of similar-ish duration, both in length and in height. Okay. I guess we have time to look at some other cryptos. Bitcoin is, of course, the classic one, Bitcoin index. So to sum up my take here on Cardano, looking years into the future, I am feeling bullish. Looking at the coming months and weeks, there's just too many reasons to expect some kind of a pullback. A meaningful pullback. Based, of course, on the history. And yeah, which is pretty important to look at. Okay, so here's Bitcoin. Monster rally. Very, very impressive, of course. We are seeing some meaningful pullback happening here. The problem with big rallies is that let's go here to the daily data points to illustrate the point. In order to get back, to a key support level, you need to travel. It becomes more dramatic the more euphoric you were before. So let's take, the red 200-day moving average. So to have that correction from that high to testing the 200-day again, that was, minus 40%. So if we were to revisit that key moving average based on where the price is now, that would be a minus 60-ish% plunge. Of course, the 200-day moving average is moving upwards, and as such, if we were to just grind down to test it, it would most likely be around minus 50-ish, maybe, percent pullback. I'm not saying that is happening. What I am saying is that the reason why I am such a big fan of rational, gradual, measured rallies with breaks every now and then is that those are more sustainable. They create a situation where we do not need to have those dramatic corrections. And if cryptocurrencies are going to be mainstream in a real sense, then they need to start behaving like normal securities.